In this video, we will discuss fundamental analysis. As a part of fundamental analysis, we will examine how macroeconomics and social factors impact the relative value of currencies, commodities, stocks, indices, and cryptos. We are mostly technical analysts and day traders. Therefore, price is king at the end of the day. However, our trading plan will be primarily price driven, but we will also incorporate important microeconomic and macroeconomic events. Technical analysis will be the focus in this course, but this video will give you a light instruction to fundamental analysis so you can decide how far you'd like to go into studying it and beginning to build strategies based on it. Many traders don't know where to start when it comes to fundamental analysis. My advice is to develop your technical skills first and then start to study more fundamentals. You'll eventually have technicals down and be comfortable with them, allowing you to start to develop the fundamental skills more. Some people are more inclined to technicals, some people are more inclined to fundamentals. So after watching this video, you may have an idea where you fit. I have a lot of material that I can recommend to help you develop your fundamental skills. So reach out to me in the comment section, leave your questions in the comment section, but let's get into the lesson. Okay, so we're gonna get into fundamental analysis now. It would be arrogant of me to say that I can cover fundamental analysis in one video, but as technical analysts, I want to say that I know multi-million-dollar traders who are confirmed, multi-million-dollar traders who are pure technical analysis. They have a mile wide, inch deep understanding of fundamental analysis. And so I would say to you that when it comes to fundamentals, we're going to take that approach, right? I want you to focus on technical analysis in the beginning. And as you grow, as you become more comfortable with technical patterns and establish at least 2 to 3 A setups, then I want you to focus more on fundamentals, because fundamental analysis itself is a very wide range. And without proper resources to study it, it can be difficult to understand. But I'm going to try to give you a quick introduction in this video for you to understand some of the key things that are relevant for us as technical analysts, as day traders. Okay, so just know that this is an introduction, but reflecting back on my journey, I've never had this type of introduction that I'm going to give you today. Okay, so this is based on my experience, my knowledge in the market, me having some news plays that I trade. So just know that this is an introduction. Okay. All right. So what is fundamental analysis? So fundamental analysis is breaking down the impact of macroeconomic and social factors, right, that are relative to the currency, to the commodity, to the index that we trade. Okay. So it's the part of the economy that has to do with fundamental drivers, things that fundamentally drive the economy. Right. So I'm going to talk a little bit more about that in a minute, or things that fundamentally drive the success or the downfall of a company. Right. If you're trading an index. So this may include, geopolitical meetings, market rumors. This includes a whole lot more, which I'll break down in just a minute. Right. But the difference between fundamental analysis and technical analysis is that with fundamental analysis, we must examine balance sheets, okay? Like the Federal Reserve balance sheets, right? Balance sheets of companies, right? There are data releases that we're looking for, okay, when it comes to fundamental analysis, right? There are statistics that are released when it comes to fundamental analysis. While with technical analysis, we study charts and price action of the charts, okay? So the combination of the two make a great analyst. But again, we will use technical analysis because the price action is king. I want you to know, if you look at the book Market Wizards, you'll find there are mammoth traders, huge traders, multi-million-dollar traders who lean towards the one or the other. Some say fundamental analysis is king and they only use charts for a small amount of their analysis. Some say technical analysis is king, that fundamentals are a small part of their analysis. Again, it all comes down to playbook, right? If you have a playbook with edge it doesn't matter if it's fundamental edge or technical edge, as long as it's proven to have edge, right? So first start with technical analysis and then move into a little bit more fundamental analysis. That's my recommendation. Now, what is macroeconomics? So macroeconomics it's a broad field, but it's a study of the aggregate economic relations, right? The exchange between consumers, businesses, and the government. Okay. So like when you study macroeconomics, you're looking at the growth, the expansion, the growth of the economy, the growth of a business, right? The expansion of the labor field, right? You're looking at recession cycles, right? And how the value of the dollar, right, impacts investments and investing, right? How the unemployment rate, right, will impact the economy, right? How inflation will impact the economy, right? So it's a much broader scale study, but there are three main factors when it comes to fundamental analysis and macroeconomics, right? It's the GDP, the gross domestic product, right? The growth rate. It's the unemployment rate, right? That's a big one. And then inflation, right? The changes in prices, right? Those are the three main economic factors that impact an economy. And so that's why you may see people talking about inflation in the market, talking about the unemployment rate, talking about the rise of interest rates because of inflation, right? Trying to bring inflation down. So those are the three main factors, okay? And I'll have to create a video that'll go further into macroeconomics. But what I'm going to do is just condense the relative information for us as technical analysts, especially right now. If you can just focus on these things that I'm about to show you, that's all you need for now, okay? So there are three types of fundamental catalysts, right? So the reason why you want to study fundamentals is because you want to be able to read what's happening in the economy, happening with the government, happening with a company, and understand how that is going to move the price. That's it. So when I say catalyst of moving the price, okay? So you see here, price impact. So I have three categories. One is short-term price impact. These are the spikes. So if you look at NFP, there are certain news events or data releases that come out, and you can just stare at the chart and you'll see a blast up 20 pips, 30 pips, 50 pips, just blast in one direction or the other. So you can actually build plays around these, right? So the short-term catalysts, the small spikes, are the NFP, non-farm payroll, CPI, okay, unemployment numbers, okay, ISM manufacturing, and more, okay? So again, this is just an introduction. We'll have to get into this more further. But when people talk about the news and they're skeptical of the news and skeptical of trading with the news, the reason why is because they may not have categorized news in this way, right? The news is our friend. Volatility is our friend. We just have to build edge around the news, right? So if CPI comes out and according to our technical structure, price is buying, then we can build a play where we're going to buy with structure as we normally would, but we will expect that there's going to be a stronger move, right? So we have to trade that differently, okay? And we may choose to reduce our risk or keep it the same based on us validating the edge for our particular pair or our particular index that we're trading, okay? So short-term catalysts. Now, next, I've categorized as medium to long-term catalysts, right? These are events that are happening that will break the structure of the pair, right? So you may be trending up and then there are high inflation. So the government, the Federal Reserve, chooses to raise interest rates. So when they choose to raise the interest rates, then making it, people start to sell off the indexes, right? Their stocks. So understanding this happening in the economy, then you'll see that when the price is going up in an uptrend, it may not be an immediate short-term blast down, but you'll know that overall, the price will start moving down into a bearish market, okay, into a downtrend, right? So these are medium to long term. So you'll be aware of this happening. Like right now, the way that the economy is going, heading into a recession, right? Inflation high, interest rates. The government has decided to raise the interest rates, right? So we're expecting that the indexes, right, will go bearish. So I'm loading up on some of my prop firm challenges. I'm loading up a special account to trade the bearish market, right? I've been bullish for the last 46 or 36 days, trading with the rally, because I understand the big boys will, once they've acquired a position, they're going to rally that position and keep acquiring more contracts so that when they decide to sell, they can make good profit. So I'm going to go with them right now, but I am aware that they're going to do, it's highly likely that they're going to do a big blast, a big sell, right? So we're day traders, so we trade what is in front of us for the day. But as we grow in our analysis of fundamentals, then we can understand that there are broader macro level events, catalysts that will impact our currencies, impact the currencies, the commodities, or the indices, right? Okay, so the GDP is one thing, right? Unemployment, right? Consumption, right? Inflation, interest rates. These are all things that you may have a report that comes out, a data release that causes a small price spike. But if there are ongoing issues with any of these, then you will see a break of structure, and the direction of the market for your currency pair will change. Okay. Then I'll have a third bucket, which is panic, panic and emergency catalysts. Okay. So these are catastrophic changes in price due to war, due to recession, some sort of major political unrest, right? A coup or a lockdown of the government, right? This could be like COVID, for example. If you look at when COVID hit, if you look at the market, massive sell. Like if I go and look at US 30 and in March, massive, massive, massive sell. You could have just sold with your eyes closed almost and made money, right? So these are catastrophic changes in price that happen and continue over a few days. And sometimes there's no structure, right, in the market when these happen because there's panic. Okay. So let's dive into the currency pairs a little bit, right? So we want to look inside of a currency pair. Now, one of the challenges that people have, that technical analysts have when they're looking at fundamentals for a currency pair, is that they may be looking at one economy, right? If I'm trading Euro USD, for example, if I'm in the US, I may only be looking at the US economy and saying, okay, there's high inflation, right? Interest rates are high, unemployment's high, etc. And I may be valuing what will happen based off of me only looking at the Euro, at the US economy. But inside of a currency pair, you have two economies, right? So for Euro USD, you have the Eurozone economy, and then USD, you have the US economy. So there can be both economies can be doing bad, but in both of them doing bad, one may be stronger than the other, right? So as an analyst, you're going to be looking at both economies when it comes to fundamental analysis, right? So both economies have a central bank, which acts as the the manager of the economy, right? Both have central banks, both have macroeconomic dynamics, and then both economies have investment banks that try to trade with the central banks, and these investment banks are moving the market as well. With the central banks, they control the market. The investment banks are moving the market, and they know the patterns of the central banks. So we want to be trading with the central banks and the investment banks. We don't want to be trading against them. So understanding what's happening in the market from a fundamental level, understanding the macroeconomic dynamics in both economies helps us make stronger decisions. So again, this is only a primer, but I'm just giving you this so that you can, as you grow in your technical analysis, you can become stronger in fundamental analysis. Come back to this video. If you demand that I do something in more detail, I'll go in more detail. But for now, I think that everyone should take what I'm showing you now, and you can build your technical skills, become consistently profitable as a technical analyst, and then become more strong with your fundamentals as you grow as in your technical analysis. Okay. All right. Now, so let's talk about central banks. So the economies have central banks. The central banks are the biggest market maker. They move the currency, right? Why? Because the central bank is a national institution, and it manages the currency of a country, right? Or a group of countries. It controls the money supply, literally the amount of money that is in circulation. The main objective of the central bank is to maintain price stability, right? Some sort of equilibrium, right? And George Soros talks about this in his book, the Alchemy of Finance. How and he's one that shorted the British pound and made I believe $1 billion. So the alchemy of finance, he talks about how, when it comes to two currencies, a pair, there has to be some level of equilibrium or the entire country is going to fail, right? So when you open up the chart, you'll see a rhythm of equilibrium, right? You'll see ebbs and flows. And the reason why those ebbs and flows are there is because the central bank of that national economy, is trying to keep stability. So you knowing this as a technical analyst, you'll understand why we may be uptrending for a little bit, and then we do a downtrend. Then we may be ranging, right? So you have to be able to trade the long and the short position as a technical analyst, because if not, then you'll be buying sometimes, and when the market is selling, you'll miss a lot of opportunities, right? So one of the main things that the central bank will do is set interest rates, right? That's literally the cost of money, right? If you go to buy a house, like, okay, on a 30-year mortgage, and you say, I want a $300,000 house, right? If the interest rate is 10%, okay, that's the cost of money, right? The interest rate is 2%. That's a whole different, that's a big number, right? It's a big difference, right? So based on several different dynamics, the central bank is setting interest rates, right? The cost of money, right? As a part of its monetary policy. And, so an individual cannot open an account in a central bank, right? Or ask for a loan, right? As with like a public bank, right? The central banks, they decide whether to cut or raise the interest rate, right? They build programs to create money, right? They build policies to, extend and grow the economy, right? And the weight of their currencies, right? So their decisions impact, right, the currency in a big way. So let's go a level deeper. Now, if supply and demand, as we talked about, is the underlying logic that moves a currency, then what is the central bank's play in all of that, right? So markets are not moved by the central banks, right? They make up the market, right? It's actually the investment banks, okay? The big moves that we see on a daily basis, these are investment banks, okay? They hold like the edge on their side because they have the large positions in the market. They can tip the balance of supply and demand, right, in a certain direction, right? So it's their investments, their investment models, right, that they derive from central banks, like directives from their policies, right? It's those large institutional investors that move the market in a certain way, and they are trading against the retail trader. They are making a money against the retail trader, okay? So now the more in tune you become with technical analysis, how the institutional traders trade, which we cover in supply and demand, right? And then how the monetary policies of the central banks impact the economy, the greater of a trader you can become, right? So remember though, technical analysis is number one, okay? But as you grow, understanding more fundamentals will assist you, okay? It will help you be more patient. It'll help you make longer term decisions, okay? So now let's talk about companies. Okay, so we talked about central banks. Let's talk about what's inside of a currency pair. Now, what's inside of an index, right? So in an index, like the US 30, you have the top or a group of the top 30 companies, right, in the US, right? And they hold different weight. These are multi-billion dollar companies, right? So it's an accumulation. Like the US 30 is an accumulation of their value. Okay, so when you're trading US 30, you're trading their value. So as these companies, the stocks value go up or down, the index will go up or down. So you have these are the top 10 companies of the S&P 500, right? So the S&P 500 are a group of 500 companies, right? So you'll see Apple, Microsoft, Amazon, Tesla, Alphabet from Google, Berkshire Hathaway, right? So inside of an index, you have 500 companies. These are the top 10, right? These hold the weight. So if Apple is strong going up, Microsoft is strong, Amazon is strong, Tesla is strong, then we'll be seeing the S&P 500 go bullish, right? Here's another one, NASDAQ 100, right? So this is the top 100 tech companies, okay? Exclusively tech companies, right? So here, Apple, Microsoft, Amazon, Tesla, right? NVIDIA, right? Meta, right? So what's influencing these, right? So these companies, right? They have earnings, right? They have, they're releasing, when it comes to data, right? We're looking at balance sheets. We're looking at earnings. We're looking at unemployment, right? And again, I won't go so far into it, but it's some of the same things that will influence people's investments into the stocks as it is a currency here. Okay, so let's talk about how currencies are kind of like companies. Okay, so currencies are like companies, right? And the Federal Reserve, right? Let's say the dollar is a company. It's called the dollar a company. And the dollar, the company, the dollar is led by the Fed, the Federal Reserve. So like a company is led by the CEO, like Apple is led by CEO, Tesla is led by Elon Musk, SpaceX is led by Elon Musk, right? And the decisions of the CEO will impact, right, the company. The currency is like a company, and the Federal Reserve is going to release statements about their decisions that will impact the currency. Same for the European Central Bank, right? So the European Central Bank is the Eurozone economy, right? It's their version of our Federal Reserve. So we know the Federal Reserve because in the US, if you're watching this video, you may live in another country, but I know Jerome Powell, right? I know people from the Federal Reserve because I'm watching the news to see what's happening in our Federal Reserve. You know people from the ECB if you're in the Eurozone economy, right? So the Euro company, this is a typo, it should be the Euro company is led by the ECB, right? They make decisions on monetary policy, on interest rates, etc., that will impact the economy. So understanding, and you can look at the two economies and project long-term where things are going, right? Have an analysis based on that. But that's the fundamental analysis goes really deep into those things, right? They pull both reports of each economy side by side, right? And they have what they call fundamental support and resistance. They'll say that, you know, there's a certain support and resistance that can't be broken because of equilibrium between two economies, right? So there's a lot more about fundamental analysis that goes out of the scope of this video. But what I want you to mainly think about are these: the short-term catalysts based on data releases. And I want you to trade these according to structure. Trade these according to structure, okay? The medium to long-term catalysts, these are breaks of structure. You also will trade these according to structure. That's why technical analysts say price is king. If US 30 is trending upwards on the daily, okay, so US 30 has been trending upwards, okay? So if you look at the weekly time frame, US 30 has been trending bullish, okay? This is COVID hit. Catastrophic drop, okay? Catastrophic drop. This is 11,367 points This is catastrophic if you don't know. And this is over just a few days. So here, this is just what? Yeah, this is about a month. A month went by and that drop happened. If you look across US 30, that has never happened. See that? That's catastrophic drop. Okay. Right. So, but then if you look at over the weekly, it's rallying. But what's going on in the US economy now, look at it. It's bearish, it's going down. Okay. So being aware of that will help you. Right. And then but you would just trade this according to structure. Nothing else. Right. So each time that US 30 goes bearish, it's a break of structure on the daily. We're selling here, selling here, selling here, break of structure, selling here, right? Price does some distribution here, breaks again. We're going to be selling, selling, selling on the lower time frames. Okay. So when I talk about the medium, when I talk about the medium catalyst to long-term catalyst, us being aware of it, right? Us being aware of it, that is something that's important. But it all goes back for us to structure, okay? And then the panic, like COVID, for example, if we look at US 30, when this happened, we see also okay, so we will see also this time that price was giving us structure. Okay. So as price was breaking down, this is a supply zone. Okay. And then we just have breaks of structure. Okay. So it's catastrophic. We're aware of it. Look, break of this structure here. Boom, down to the downside. Okay. So as price was going down, we had some structure to look at, right? For the look, drop, base, drop, sell, boom, sell, right? So there you'll find structure. So being aware of it is great, but it all comes back to technical structure. Okay. So what I want you to take away from this is mainly this here. Okay. The types of catalysts, the short-term catalysts, short-term spikes. We have the medium to long-term catalysts, and then we have the panic, right? Catalyst, right? So please drop your comments and questions in the section below. See you in the next video.